What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Nvidia, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, February 5th. Nvidia here today, finishing the day up nearly 5%, grinding just slightly higher, a couple of points higher here in the after hours. Listen, as always, after hours, take it with a grain of salt because the volume is very low. Whether it's in your bias or going against your bias, we have to take that with a grain of salt. But if you're a bull, you know, it doesn't hurt to see, of course. Now, on the 1 minute chart here, let's zoom in a little bit, get a little bit of context on the 1 minute, and then take a look here. This here is typically, usually when data like this gets fed to brokers, it's difficult to take that at face value. I think we have to consider that this is likely some kind of data error. You know, of course, it's possible, right, that we saw 1.85 million shares traded in a 1 minute candle on the close. Just unlikely, okay? But if we look at the 5 minute, because what I want to do is I want to show you guys the actual volume off the open, because this is very relevant looking to next week. Look here. The highest volume of the day, of course, aside from this candle, was off the open. That's not uncommon, but it was all drastically to the upside. Green candles, right? And big volume on this really aggressive push higher. And what's really interesting about that is, had this push higher happened on lower volume, it's not uncommon to see those low volume pumps off the open fade. Now, this was such good volume with such an aggressive pump. The stock, I was very surprised to see the stock held the 9 EMA until midday. That's very uncommon on a huge pump like this, you know, pushing obviously to all-time highs of 666 there. About a 5%, 4.5% move from those pre-market lows just immediately, you know, right before the open there, we faded into the pre-market, into the open, and then pumped through to midday. Now, one more thing that I need to make sure you guys are paying attention to. Do you see this? Do you see that consolidation into the close? Listen, after a big morning like this and a push to all-time highs, I mean, the stock's up 5% today. It's up 31 points. That right there is just about the best movement I could ever ask for. Holding the 660 area strong as a house, even though we've never been up there before. I mean, listen, at least heading into the weekend, heading into Monday, you can't really ask for much more than that. It would have been not unrealistic at all to see this fade and give back half the day and finish the day up 2%, 2.5%. But no, we held the move incredibly strong. We essentially reclaimed claimed for the first time, I should say, 660 as a potential area of resistance. We're going to have to draw that line here pretty soon, but I'm not ready to do that. It's a little bit premature. I'm a multi-trading day kind of guy for big new levels like that. So let's move on here to the 30-minute chart and take a look if there's anything relevant here for the coming week or Monday more specifically. Now listen, honestly guys, here on the 30-minute, this was such an aggressive move to the upside. There's nothing immediately relevant where the stock is right now, but what I want to look at on the 30-minute chart, and by the way, that's not to say there's nothing on the 4-hour and daily. We'll get to that, no, don't worry. But here on the 30-minute, the nearest level, since we pulled away so hard today, I mean, 5% is a big day, is 642, right around that 50 period. Okay, that's going to change once open comes on Monday. We're likely to see this shift, right, depending on how pre-market looks on Monday. But that would immediately be what I'm looking at. And then aside from there, we're looking at the all-time high. Okay, 630 is an area to watch. The 200 period on the 30-minute is at 624 approximately. But let's move on here to the 4-hour. And you can see here that this gives us a really nice view of that previous region that was acting as an area of resistance. We, of course, broke through 630 on Thursday. Okay, and today pulling as hard away from that as humanly possible here. So again, to the upside, you know, it's open sky through all-time high. That's what I'm looking at. But to the downside, you have 630 as a potential support level. If we end up seeing just a big tank off day or something on Monday, that's a potential area, of course. And then on the 4-hour chart, that 50-period moving average is sitting right around 618, looking for that to hold as well. Otherwise, that would open up, you bears, if all this ended up breaking, they would psychologically, clearly be looking at 600 as that next level. Understand, though, that's nearly a 10% move to the downside away. So let's now take a look at the most important chart, at least in my opinion, which is the daily. This is going to be the most common and the most heavily watched, okay? You can see the 200-day moving average is still below 450 at 441. The 50-day moving average is right around 521, 522. So not immediately relevant here. So similar story. Listen, and when it's a similar story across the board on multiple really, really heavily watched time frames, I think that's better, because that means that everyone's on the same page no matter what time frame they're looking at. And you and me, right? We're looking at all the time frames. So we want to have kind of a bird's eye view of what everyone is looking at. When they're looking at little pieces, we're kind of getting the whole pie. Okay. So here, 666 is that all-time high. That's what we're looking at to the upside. Through there, it's, you could have open sky to 700 at least in the coming days or weeks. To the downside, it's clearly 630. From there, it's 600. And in between there, you have the moving averages on the 30-minute and the 4-hour. Okay. Now, implied volatility, for those of you who are looking at comfort of the stock and or trading options, understand that it is a little bit elevated compared to the recent past. That does open up, if you've bought options in the last couple of months, that opens up a little bit more IV crush risk if we end up seeing implied volatility fade back down toward equilibrium, like that 38 to 40% region. Currently, we're at 45.5%. So just keep that in mind. But again, it's not the end of the world. We've recently as Halloween time around there, we're as high as 54, 55%. Okay, let's finish up here by taking a look at the options chain, seeing what the traders are thinking as we head into Monday. Big sample size here. 2.3 million total contracts traded. 1.39 million of those were calls. 914,000 approximately of those were puts. So the overall call put ratio is leaning slightly to the bullish side here. But what are the short-term speculators thinking as we head into Monday, right? Those gambly style short-dated, out-of-the-money calls and puts. Well, that 0 to 20 delta range tells us exactly that. We have a decent sample size, about 903,000 contracts traded from both sides in that range. 414,000 of those were calls, and 488,000 of those were puts. So interestingly, we're actually seeing the overall call put ratio lean relatively heavily to the bullish side. Now the short-dated 0 to 20 delta range contracts leaning slightly to the bearish side. But how does that work, right? Well, the reason we're seeing that is because the 61 to 100 delta range, those in-the-money contracts, those more expensive, the higher quality contracts, the higher quality money, I like to call it, is actually very heavily to the bullish side. We're seeing 170,000 calls from 61 to 80 delta and 159,000 calls from 81 to 100 delta. On the put side, we're seeing just about 40,000 total from 61 all the way to 100 in both of those ranges. And that's that mid to longer term, more expensive, higher quality money or contracts. Okay. So overall, we're seeing a bullish chain. In the very short term, we're seeing a very slightly bearish chain. And in the mid to longer term here on Friday, we're seeing more of a bullish chain in the mid to longer term here. That's what the traders are telling us. But again, as always, they can be wrong. Manage your risk. Let me know what stocks you'd like me to cover here on the channel in the future. Even if it is just Nvidia, that feedback helps out tremendously. And I'll see you in the next one.